Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Well, we started out the day with not such great economic data, I'll have to admit. It made me actually a little bit nervous, but then some of the later data started looking a little bit better. So let's go over that real quick. Here in the United States, not anything really across the pond to talk about, but here in the United States, we've got the core durable goods orders came in at 0.1%, expected to be 0.4%, so missed on that one. And then core durable goods came in at a negative 4.2%, expected to be a negative 2.2%, so much worse than expected there. Now remember, core durable goods strips out some of the more volatile aspects of that, being automobiles, airplanes that we don't buy every day. I don't think everybody's buying airplanes every day, but it's things that you are going to buy and hold for longer than 3 years, basically, okay? And when you strip out some of those things, it's more of the volatile aspects, which is the cars and transportation items. Then we got employment claims came in at 224,000, expected to be 215,000. So higher than expected there is not great for the economy. More people looking for employment, especially coming into the holiday season. That's not really too out of the ordinary, to be quite honest. And then they revised last month's number up slightly to 212,000. So both of those numbers showing people really starting to look for jobs. A lot of people could be coming off of the sidelines in a sense when we have these jobs numbers. If they stop looking for a job and fall off the unemployment line list, then they are no longer unemployed. They are disparaged workers in a sense, but they don't fall into the category of the statistical findings, okay? So, but then when they start to see the economy picking up and maybe coming around a holiday season like Christmas here, they start looking for jobs again. They come back into the job market in a sense, and that's what we're seeing there. All right, and then we also got University of Michigan consumer sentiment came in at 97.5, expected to be 98.4, so slightly lower than expected there, but still a pretty good reading overall. And then existing home sales came in at 5.22 million units, expected to be 5.20 units, so slightly higher than expected, but pretty much in line there. And then University of Michigan consumer sentiment came in at, University of Michigan inflation expectations came in at 2.8%, and then the University of Michigan consumer sentiment came in at 97.8, like I mentioned there. All right. Crude oil inventories finally came in at 4.3 million. I think it's 4.9 million barrel build, expected to be a 2.3 million barrel build. So higher build, would expect crude oil to continue to slough off a little bit. I think what we're seeing here is this major just downdraft here. It's just almost has to bounce just on the fact that it's just way overdone to the downside too fast. Despite the fact that we're seeing these builds and a lot of inventory, when the markets move this fast, it has a tendency to snap back and kind of blowing out all reason in that process. I think we might see some of that bounce happen here before we may continue down. I'm not saying the 40s are out of the realm of expectations, but I think that we're going to see a little bit of bounce at least here before we start resuming that downtrend there. All right, and then on to gold futures. Gold futures are pushing higher with all of this volatility and uncertainty in the overall markets, especially with yesterday's late in the afternoon sell-off. Gold is going to start finding a lot of traction here as a safe haven. People getting worried about this move. I think a lot of people started capitulating yesterday. That is a good sign of a market turnaround as far as I'm concerned. So as long as we can stay with that, we're going to be good. Bitcoin getting a bit of a bounce here by about $100. Again, I don't really have a market directional assumption here with Bitcoin. It looks pretty sad with the last 2 days. It's pretty much an inside day today. I don't think that we're getting any sign of a bottom here right now in Bitcoin. All right, bonds unchanged for the most part, but I think with this economic data that we've started to see here is going to start reinforcing the fact that the Fed should hold off. Now, we're starting to see probabilities drop just a little bit on increasing interest rates going forward, but I think that this is going to be something that the Fed really needs to look at going forward here. So take that for what it's worth. And then the VIX, kind of unchanged right here, but let's look at the overall equities. You can see inside day here. This is what I was talking about yesterday, late in the day. Remember, we were talking, the market was actually pushing positive slightly right after I got done with the daily market commentary. Equities went into the green. Then that was about it. It was just for a brief moment. The market really started sliding off on lack of volume. And then, heading into a holiday weekend, we would have expected that to push higher. I thought that with the lack of volume, it would have helped us higher. Didn't happen. But these are all the things that I've been talking about with the areas that we're trading in. We're getting that volatility snapping back and forth. I think that it's going to hang out right here. I think that a lot of people are very nervous and are going to be dumping positions, but that is an opportunity for others to pick up at these levels. And I think that that's what we're seeing here is the weak hands getting out. And that's why we're seeing a lot of this volatility. I believe we are going to start staying here close to the point of control until there's something that is a real big kick in the pants to get us to move. All right. As we can see here with NASDAQ, almost retracing all of yesterday's losses. We got a little bit further to go, but again, similar situation. Late in the day, low volume, slammed to the bottom. Today, rallying up as the shorts start to cover on those weak hands. Now we look at the E-mini S&Ps. It is positive on the day, but I have this on a week chart. So let me go to the daily chart here. And as you can see, with the E-mini S&Ps has retraced almost half of yesterday's losses. That is a good sign, especially if you're a bull. But I think that we're going to kind of see this kind of similar situation where we bounce up. I don't think that we're going to reach this level yet. I think what we're going to do is come back up to the point of control, and that's where we'll start to see this market start to settle down. And then if we look at the E-mini S&Ps on the daily chart, these are 30-minute candles. You can see overnight inventory started getting long because everybody was short. I'm sure the day traders were even up last night trying to cover some of those shorts as that market really sold off yesterday late in the day. And there was no attempt to really flush those longs out coming into today with the economic data. I thought that that might have happened. It didn't, which is a sign of strength as far as I'm concerned. So the market obviously predicting worse than the economic data points that we got, and therefore is celebrating that with the move higher. And then that's about it. I am looking at Under Armour. I might be covering this because of yesterday's market action and today's confirmation to the upside. I'm going to be pulling the ripcord on this probably today. Remember, I am short these at the 18.5 level. I've added some options in order to lower that or increase my basis on that so that I am probably right around $19 is my break even. We're pushing higher here by about $1. I think I'm going to cut the losses on this one. It does not look like it's going to want to go down there and try and cover a gap or anything like that. So I'm just going to cut my losses on Under Armour most likely today or maybe early next week. I'm going to keep an eye on it just to see how the rest of the broader market works. All right. That's about it. Other than check out the webinar from yesterday. It was we're not doing a webinar this week. That's right. It's Thanksgiving. So we're going to have tomorrow off. You guys all have a great Thanksgiving. That's all I got for you. Other than if you can't take that, take it easy.